Let us get the show on the road. So, spring is over, summer has officially begun, and there's a lot of uncertainty in the world over the last few months. But what does that mean for New York City real estate? That's what we're about to find out by listening to this phenomenal panel of agents and experts, each with over 20 years experience. So this is our 45th real estate chat we've had over the years. Please note that this call, like all our calls, are recorded, and I'll send out the recording along with notes after the call, probably sometime tomorrow. Might slip to Monday, but I think I'll be able to do it tomorrow. We usually do these every 2 or 3 months, and they're always on Thursday at 11 o'clock. So about me, my name's Phil. I'll be hosting today. I was a New York City real estate agent for about 20 years, but now I spend my time running leasebreak.com, a marketplace for shorter leases and lease breaks with terms between 1 and 12 months. We got about 5,000 rental listings, most of them not on Street Easy. So keep that in mind. And I do want to mention that if the FAIR Act takes hold in June, please note that about 1,600 of the listings that we have on our platform do offer OPs, and agents can search by using OP as a filter. So just something to keep in mind. So let's turn to our panel of experts and see what our panelists have to say about the market. First, as always, we're so lucky to have world-class data expert Noah Rosenblatt with us today. He's the founder of Urban Digs, which is a data analytics and market insights platform. I know many of you subscribe to it. And we usually start with Noah, who provides a good base of what's going on from a data perspective. And he's also been providing a chart or two, which I think he'll do today as well, which has been extremely helpful. So without further ado, Noah, let's turn to you. How is the data looking? What do you have for us?
Well, first off, hey, Phil, and thanks again for having me on with this esteemed group of experts over here. It is an honor to be a part of this group. Um, the market is interesting, tricky, changed a little bit since we last had this conversation, I think. We were doing great. We were doing great until about early April. I don't think I need to go into the changes in the world that happened then. But this market seemed to have been recovering February and March. March was a good month, especially the end of March and very, very early April. Like we were doing well. Off to the best start since 2022 in spring. And then things kind of stalled around early April. And I think the market did shift a little bit over the last 4 or 5 weeks. I feel like the market's starting to come back a little bit recently after that uncertainty hit the markets in April. Hard to measure price action right now. I feel like the market today is definitely probably a little lower than wherever we were in late March and early April, but I can't measure any of that because all of that stuff is still in contract, right? It's still pending. So price discovery of this whole shift is going to have to wait. It's going to have to wait a little while, probably till late July and August is probably when we're going to discover how much we actually shifted down. In the meantime, I am seeing record rents. The rental market's just having a moment right now. And whether or not that's going to be a fading moment or whether or not that's like a new cycle that's starting is a really interesting question. The sales market is starting to also see some strong price action coming in, which is strange considering what I just said, right? And that's the weird part of this market. That's the interesting and tricky part of this market. The sales action that's coming in right now is really reflecting the market as it was in February, maybe early March, maybe, right? But we don't yet have late March and early April contract signed in full. So we have some pipeline strength coming in. We have record sales prices, in my opinion, on a month-to-month basis. We have record rents coming in on a month-to-month basis. It's a really interesting time for Manhattan real estate after a decade of the sales market really not doing much. So is it awakening? That's really the question.
Great. And Noah, do you have some charts that you wanted to share?
Yes, I do have charts. I did want to back up what I was talking about over here, guys, just to show you real quick. And I don't want to take up too much time. I want to get to the other panelists. But this is the rental market I was talking about. Take a look at April. Take a look at that April green bar. This is median last asking rents for all of the rentals that we have in our data system. May did have a little bit of a tip down, but you're looking at $4,800 rents right now. It just basically popped from 4,500. And again, that's the record rent that I'm seeing. And I don't know if this is going to start a new downtrend. I feel like if anything, we're just going to a new higher level. I don't know how high, but it looks like we're getting very, very close to that $5,000 level. And you guys are going to start to hear some articles and some headlines about record rents in New York City, in Manhattan. And this is the resale condo price per square foot for Manhattan. And again, it shows you a couple of things. Number one, we really didn't do anything over the last decade. Now you can see what I'm talking about. At which point the national housing market's probably up 100 and some odd percent since the last decade. We haven't done much. But look at the last print or two that's coming in. We're starting to see a higher level of closed sales prices coming in. And again, that doesn't represent today. That represents probably February, probably late January and February's market. So we still got March and early April to come through the system, and I expect those sales to be strong. So you might have like record sales prices and record rental prices, but in reality, the rental market seems to be at a much stronger level than the sales market.
Great. Noah, I heard you. I get that you gave like a podcast or a talk, and you're talking about how the sales market has really obviously been kind of flat, for the last 10 years. And there was some talk that could mean that there's going to be some appreciation. I'm just curious. I don't mean to put you on the spot, but sometimes I wonder, is that because the market previous to the last 10 years in Manhattan took off just so much, and now we're kind of paying for that a little bit? You know what I mean?
Well, it's not really my thesis. This is on Urban Dig's YouTube channel. It's why the New York City investment thesis may be awakening is the title of the webinar. It's Noam Newman, who was the guest for that webinar, and his thesis is basically that this is a rental moment, that we are in a rental moment right now, that this is just the beginning. What you're seeing right now in the rental market is the second inning, to put it into baseball terms, that over the next year to 2 years, the rental market is just going to grind higher. That doesn't mean in a straight line. Nothing goes in a straight line. It'll have a little down, but it's generally going to go higher. And if you think about where rents are now, and if you think about, well, what if they go higher for another year or two, right? In 2 years, at the end of that, he thinks there's going to be a rental frustration and there's going to be a cyclical shift from the higher rental market to the sales market. Now, during the course of this 1 to 2 years that the rental market's going up, he thinks the sales market's going to be flat, just like we're doing now, sideways flat. But in 2 years from now, when the rental market gets to this crazy high new place, there'll be a fundamental shift towards sales because the math is going to start to make sense. Whereas now the math ain't math.
And I guess if the rental market does just explode over the next year or two, that also could mean investors for sales could start to come back on the market, right? Which could be good.
And that's how it all works, right? It starts with the rents and the commercial sector. It starts with those leading indicators, and then that brings in the investors. It brings in potentially rental developers. Then there's a shift to sales. Sales start to get going. That brings in sales developers. That brings in investors there. And it all tends to feed on itself. And you're talking about a market that hasn't done anything for a decade. So it's an interesting setup, a recipe for the next couple of years.
Great. Thank you, Noah. Let us now move back to the agents. And by the way, we may get back to Noah. So if you have questions throughout, we could always bring Noah back in. But let's talk to some of our top real estate agents and managers to get a more, I guess you can call it, boots on the ground perspective. And like last time, I am going to ask everyone to give me a number between 1 and 10, where 1 is a strong buyer's market, 10 would be a raging seller's market. And please, this time, let's just pick one number, just one. Not, oh, the new development would be this, and condos would be this, and co-ops would be this. Let's try to stick with one number because we're really trying to encapsulate it all just in that one figure, and it helps us track things over time. So with that, let's see, is Scotty on? Because Scotty said he had to go, and he's not on. Okay, so in that case, we'll just move to the first that I'm seeing in the chain here, which is Dan. Dan, I got you first up there. What do you got for us, man?
My number is a 3, an 8, and a 4. I'm joking. To Noah's point is like it's every time that we feel like the market is getting back as something happens and kicks us down again. So yeah, I mean we were sailing pretty strong up until the beginning of April, until Liberation Day happened, where we were not liberated. And I think the market slowed less than I thought. Like I thought, with the stock market and everything going on and the uncertainty, yes, we saw some people sort of pause, but not as much as I thought it was going to be. And then now, to Noah's point, we're starting to see it pick back up again. And I think maybe we will have, and this is just my own personal opinion, a longer spring season than we typically do. Maybe it spills into July, but potentially. Things are certain markets or certain neighborhoods, or we're seeing crazy bidding wars like Tribeca, which in 2024 was fairly quiet. Where we're seeing insane bidding wars and stuff. Brooklyn, we're starting to see cool off a little bit, except for the townhouse market. Townhouse market's still insane over there, but definitely starting to see it cool off on sort of your luxury high-rise stuff. It seems like the Upper East Side is somewhat of an awakening. The Upper East Side co-op market, we're starting to see some life there. Upper West Side townhouse markets, a little bit of life. So we'll see. Rental market absolutely insane. It would be interesting. I think you're going to see, everybody knows the Fair Act. I think you will see a further bump in rents come June once that passes. And I think eventually, rents are going to get so high that the sales market becomes more attractive again, right? Kind of to Noah's point again. So the point here is don't go second to Noah because he covers it all, and I'm left with the crumbs.
Great. And Dan, do you have a real number for us, by the way?
Yeah, I would say, I think my last call, I said I was a 6 maybe, or a 5.5. I would say it's probably a 6.5 now. So a little bit better. If it's priced right, it's going to sell.
Great. Dan, one quick question on the rental market, because I know, unlike some others, you have a very good view of also the rental market. You've seen a lot of rental markets, and I know the prices now are almost at an all-time high. But is it still that craziness where there's bidding wars, low vacancy rates? Like, is it one of the craziest markets from that perspective also, or is it just the prices that are super high?
It's not as crazy as I would say, like the COVID craze, right? When we had, I think it was August of 21 or whatever it was, like literally you put something on the market and there was 50 people showing up with apartments, with applications. It's not that crazy, but you're still renting it within days.
Yeah, and I'm asking too because obviously if the prices keep going up at some point, there may be a little bit of a demand pushback, right? I mean, they can't just keep on going up forever.
There is, but
Maybe they
supply is
can.
so limited. Like there's
Yeah,
not that much out there.
right.
So yeah, if
Yeah.
you need a place to live and you want to be in a certain neighborhood, you got to pay for it.
Yep. Yep. Great. Thank you. Thanks so much, Dan. Let's now move to Mr. Magnetic, Scott Harris. What do you got for us, Scott?
I got some stories for you. Hey,
Okay.
Phil.
Hey, what's going on?
What I would say, I would echo what people are talking about in terms of the rental market, but I would frame it in this way. Resale, I don't know that we've really touched on the difference between the resale and the new development market. Somebody put in the chat that it can range from on resale from crickets to bidding wars. And one story we have downtown, we had a property that was ultimately, we took it over from another agent. It had been on the market overpriced for a while. We put it at the right price, got a deal, and then the building next door started to demolish itself. Not, there was a construction crew doing it, but and the buyer pulled out. We shifted to renting it out for a year while the noisy work is done, and we had 60 people at an open house and rented it a little one bedroom for $5,500, which was shocking. And we're seeing that not just in one bedrooms, but we had something on the Upper West that was asking about 8 million, and the monthlies there. And we actually saw a real circle of resales that were all sitting on the market. And the only one that sold when a contract had cut its price significantly. And we put this property on the market for rent and have like 15 people who want to see it as soon as possible. So there is definitely this gap between resale and new development, which I think is noteworthy. And there's more patience on the part of buyers looking to do deals. And ultimately, as Dan said, it's very price driven, where some sellers are just not ready to to acquiesce to where the market pricing is. But if they are, the buyers are right there. So I think it's more of a price discovery discussion than anything else. And for those buyers out there who are getting over eager about that it's such a buyer's market, they're going to be pretty disappointed. So for all of those reasons, I put the sales market at about a 5. If I'm going to have to give it one number, because I think there's a lot of places where buyers and sellers don't have as much of an advantage. And the rental market's insane. That if it's if a land, it's very much in favor of the landlord. I give it like an 8 or a 9.
Great. Thank you so much, Scott. By the way, the order of the agent panel today, I'm sorry, it doesn't seem to be the same order you came on to the call, but I don't know what that is. So I'm just going by my screen. I don't know if it's the same as yours, but I have Fred next. So Fred, we'd love to hear from you. And by the way, congrats on Brown Harris Stevens. That's wonderful. And I wish you the best of luck with that.
Thank you. It was definitely not in my playbook 2 years ago that I would leave the company that I founded, but here I am. So what I would also, I'm with Scott on the 5. And I'm leaving the rental market aside because there are too many people more expert in the rental market than I for me to opine further than to say what everybody already knows, which is that it's nuts. As far as the sales market goes, I have a quick story, which is that I have a listing for which I had truly the worst kind of listing to have, and the kind of listing which almost everything I have is, which is a big co-op that needs work. Ain't nobody wants those. And I had a deal on this co-op that fell apart at the last minute after the contracts were negotiated because the buyer suddenly discovered, God knows what the buyer's broker was telling him, that he would have to submit his tax returns. What a huge surprise. But nonetheless, that drove him away from the deal. I have a new deal on the apartment now, and it is about 2.25% lower than the deal that I had in February. And I think that actually is sort of an indicator of what's going on in that segment of the market. It's really hard. You want one number, so I gave you one number. But the truth of the matter is, the new development market really is a completely different animal from the co-op market. And the way the pricing works, they just don't relate to each other. And I think in the co-op market, sellers, both for apartments that are redone and apartments that need work, are still overly ambitious, and buyers are still, what should we say, overly optimistic about the fact that they're going to be able to steal these properties. Again, an interesting fact about the deal I just made. The buyer started out about 12% from where he ended up, because he thought he had done a thorough data analysis. But the truth of the matter is, I always like to say, and I'll end with this, that the challenge with data, especially when you're using price and location to analyze, the challenge with New York, and the reason why we will never be an iBuying city, is because 740 Park and 750 Park are on the same block. And one of those trades at between 3 and 4,000 a foot, and one of them trades at between $750 and $1,000 a foot. And they are right next door to each other.
Mhm.
So it's just so much more a complex market in terms of it's really building to building. And that's why we require the level of expertise which people on this call have, but a great many agents and buyers don't fully understand.
Thanks, Fred. So you don't think we'll all be converted to robots in a few years? That's good. That's good to know.
Yeah, I think you might, Phil.
Yeah, probably. My job's the easiest here. I agree. A robot could do this.
I think in many ways that there is probably more room for disintermediation in the rental market than there are in other parts of the market, but probably not in the current rental environment.
Mm-hmm. Great. Thank you so much, Fred. All right. Looks like next is Caroline Bass. Caroline, are you with us? And what are you seeing out there? She just went to a picture of herself. Uh, Caroline. Oh, okay. You went to a screenshot. Now I'm seeing your ceiling. Okay, cool. Caroline, you're on mute still.
Sorry,
There
I
you
know
go.
I'm multitasking here. I'm
There you
sorry.
go.
I'm so
No, no,
sorry.
no. It's okay. It's okay.
Thank you for your patience. All right, so here's what I think. I am seeing a lot of action that's happening. I would agree with Scott as well that there are deals being made and some things are sitting on the market and some things are going in the first couple of days. Some things are going within the first month. There's no action in the first 2 weeks, and then they end up with multiple bids. So I'm going to give it a 5. I'm going to rate the market a 5. And just 2 examples of what I'm talking about is I just saw with a client 239 Central Park West. It was a 3-bedroom, 2-bath, classic 7, a true classic 7 apartment. They had turned one of the baths into a laundry room. And it was listed at 2,395 with a maintenance of 3,800. Like, that's an incredible deal. It was a state condition, but that was a really great deal for a 3-bedroom on Central Park West. And they ended up in a bidding war in a matter of days. Most of the things that we had been seeing at that price point were $500,000 to $700,000 or $800,000 above that price point. So that went immediately. Then I was with another client downtown looking at little studios, pied-à-terre studios, and we saw 396 Bleecker Street, which is a co-op but has unlimited subletting rules, very flexible. And we had seen it had been on the market for 2 weeks. They had some interest, but nothing fell through. And then 2 weeks later, I checked back. It turned out it was in a crazy bidding war, and that was $649,000. So I'm seeing things all over. I'm seeing a very big range. So I think there's a price sensitivity. If the sellers get it right, they're getting a lot of action. My own deals, I have a third of them, whether they're on the buy side or the sell side. A third of my deals were multiple offers or multiple bids, not necessarily a bidding war, but there was multiple people offering, more than one person making an offer on that property. And I agree with Noah that up until the beginning of April, I so far this year am on the same pace to do the same number of deals that I did in 2021. And 2021 was the highest volume I had ever had in my entire career. So I guess it remains to be seen. I'm feeling right now it's a bit quieter, but I'm not seeing as much traction happening. I don't know. We'll see. Is that just seasonal? Are we kind of coming into a quieter season? I'm not really sure, but I'm going to rate it a 5. And I think that there's still a lot of activity going out there for the apartments that are priced right.
Great. Thank you, Caroline. Antonio, what do you got for us?
Well, it's such a business does not like uncertainty, as many of you I'm sure would agree, right? And when it's uncertain, it's tough to come up with a certainty in the way we score this market. But I'm going to be at 6. I think people are now starting to wake up that we're not going to go anywhere in terms of where the administration is going. It feels like every day it's a fight, with the buyers and the sellers, but the sellers are starting to win if they're priced it right. So we priced, I'll have some data for you, I have some anecdotes for you, but we priced this property on East 55th at 1.2 million. And the minute we went to 1.1, we had a bidding war. So that it tells me right there, it's all about pricing. Now, is the seller going to lose some money? Yeah, because they bought it for much more than that. But they've been living there for a long time, and it is, I think, a great deal for the buyers. And when we had the bidding war, another thing that I want to warn all my fellow brokers who are less than 10 years in the business, cover your butts in terms of like doing everything. My team and I always do everything by the numbers and by the book. So we release everything about assessments and maintenance and everything. And here's the lawyer accusing us because they want to negotiate, accusing us of not telling them about the assessment. And I said, well, how come the broker on the other side mentioned assessments and all of the things that the details that we had put if we didn't mention assessments? So always be transparent. Don't lie. That obviously that lawyer was lying, not saying that we're not transparent. And it's a negotiation tactic. It doesn't work, right? When you're not acting in good faith. So that's one of my anecdotes. Just kind of irritated me. It's like it's in writing that we were transparent about everything. In terms of the number, here's my number. I think it's a 6 right now, but with the condition that it has to be priced right. Now, I just want to, we're mostly all sales here, but I want to touch on the rentals. I think my team and I have made more money than ever in rentals. It's crazy. And that tells me why, it is, when there's uncertainty, you do not want to put that 20% down, right? And most everything in sales now are happening all cash. So you don't want to put all your capital, all your savings in real estate or in anything when there's uncertainty. You just want to rent. You don't want to be married. You just want to date for a year, right? So that's why. But I also want to implore everyone here to go vote. June 24th is the primaries, and whoever gets it's going to be probably our city council or assembly or whatever it is that it's in your district. So make sure that you're educating your legislators that brokers, for the most part, the tens of thousands of brokers in the state and the 15,000 in New York City are still making an average of $52,000 a year. Meaning, if they're attacking our commissions with Fair Act and whatever it is, our legislators are not educated about the working class who are brokers. Now, are there people who are making $1 million a year? Yeah, but that's true with any industry, right? There's going to be people who are going to be rolling in the dough. The last thing that I want to say is this. I've been in this business now almost 25 years. One of the people I look up to is Fred. And I almost became a manager like 20 years ago in his firm Warburg. But I saw him and I read the article, like, oh, he's now at Brown Harris Stevens where I am. And I saw him negotiating a deal in the conference room, gave him a hug, and we had a big party for him a couple days ago. I just want to say how much I love this industry where someone you look up so much, now we're under the same roof. And it's such a pleasure. Welcome to Brown Harris Stevens. And I just love, you're an inspiration, Fred, I'm sure to all of us, right? Here you are, doing deals, and what a role model you are. Thank you, everybody.
You guys can now have lunch every day together. Um, um, thank you so much, Antonio. Scotty, I don't know. I know you have to go. Is that why you're raising your hand? So you can jump in? Yeah. Okay, you're on mute. So go ahead, Scotty. The floor is yours if you wanted to go, and then we'll go to William.
Oh, I found the mute button. I am so sorry. Thank you, everybody. It's good to see everybody. I love this crew because it's the best of the best in this business, and also actual like real people who are out there doing this stuff. And forgive me if this may sound like a swipe to somebody, but you guys aren't the reality show people, so you're actually real brokers on the streets. So thank you all. I'm at my townhouse in Bed-Stuy, so sorry for any echo. But nonetheless, I put originally out of 5 because I'm seeing a lot. We're seeing a lot of activity here. We just listed this townhouse, and we price it for the market that is a 5 or a 4. So we're getting a lot of people, a lot of traffic. It was Memorial Day weekend, so we didn't expect much. I also, my other listings have had a lot of decent traffic out there. There's a lot of people that are still probably looking for some kind of deals or some kind of concessions. But it's been, I would say, very, very healthy right now this spring. This has been a very active spring for me. I would also say on the rental side, I mean, if I had 10 apartments like the $5,000 one bedroom on Charles Street that I had a couple weeks ago, I could have rented them all in one day. To the point where I had to take any of my recent rental listings in the West Village, I had to pull them offline within 6 hours because I could not deal with the amount of emails and telling people, I'm sorry, I can't get you in, because we would have 15 to 20 showings lined up and I only needed one because the first 8 people put in applications. So it's like, what do you what do you got to do at that point? So the rental market is kind of crazy. Sale market feels very healthy right now. I think the rates are what the rates are, and people are just accustomed to that. It is helpful that the market has gone up a little bit, so if people feel maybe a little bit comfortable not pulling out when they've lost a little bit of money on the market initially in March and April. So I think people are feeling a little bit better about that. And look, I don't know, New York is great. Restaurants are opening every week, great restaurants. Um, it's been kind of amazing. Don't believe that West Village girly article that y'all saw. I don't know if y'all read that article about the West Village and the girly stuff. That has been happening for the last 20 years. So I don't know why there's anything new there. I could be wrong, but I've lived in the West Village for 20 years. It seems like the same place to me. I mean, maybe there's more girls. So I guess if you're a straight young guy, I suppose it would be a great place to potentially live. But it's been wonderful. The city's been wonderful. Brooklyn is wonderful. We love spring in New York. So I'm feeling very positive about this, but I think there's still some trepidation with buyers, and that's understandable with everything going on in the world. Thanks, everybody. It's great to see everyone.
Thanks, Scotty. Well, more girls. That sounds like a good thing. I don't know what the article was about, but all right.
It's going viral. It's a New York magazine. It's
Okay.
like the West Village girlies and how they're, whatever, but who cares? It's just media, clickbait. What do I
Thanks,
know?
thanks, Scotty.
Great to see everyone.
Thanks, Scotty. All right, so now we're gonna zoom back to William Bolls. I think he's in his Connecticut home. I don't know. Maybe that's his. No, I knew it. It's a New York City home, right? It had a New York
It is.
City. Yes, I could tell.
And
Okay.
those of you that were watching me scurry around, I have a photographer. It's a new listing. Photographer's coming. I got to get it ready because we are the agents that are actually doing the thing. So, hey, I've got an interesting rental tidbit. I don't work a lot in the rental market. I have some long-term landlord clients that I just, when they need it turned over, we turn it over. For some reason, they're kind of all turning over this year, which is interesting. 2 of them went like that, super like everything else. But a little studio in Hell's Kitchen sat for 45 days. So, so it just like the sales market, even the rental market can be a little lumpy, which is a term that one of my clients used about the market a month or so ago, and it was perfect. because things are lumping. Everyone wants the same thing over here, and then across the street, there's no showings, right? So anyway, I thought that was an interesting rental tidbit. As far as the sales, so I sell two markets, Litchfield County, Connecticut, and Manhattan, specifically Upper East and Upper West. That's where my wheelhouse is. My city market my city business has been stronger this year than it has since 2021, which is great for me. It's all past clients. It may have something to do with them doing their things. But I think it's interesting because I'm finding that if you get here 2 hours early to stage your place and photograph it right and then price it right, the demand is there. It's not a deep bench of buyers, but the demand is there. The last thing I did 3 weeks ago, one bedroom on the Upper West Side, back of the building, the Alameda. A lot of us know it. Phil, you sold it to my folks.
That's the one you're selling right now?
Yes.
Oh my gosh.
So in a week, above ask, we had two all cash offers fighting for each other because we priced it right and we marketed it right. So
wow.
I mean, it's like basics, right? We all know how this goes. Connecticut is interesting. It's been quiet. My business has been quiet up there since the end of last summer. I think that is completely inventory driven. I also think that because we're so tied to the city market, because it really is a market where you buy your weekend home, I think that there's that sort of pausing hesitancy. And then at the lower end, the affordability issue because of mortgage rates, right? But I'm just grateful to still have a New York City business 21 years later, because that's what's paying the mortgage right now. So anyway.
When you said inventory issue in Connecticut, you mean
super low,
too low, right?
Just I would say, and I don't have the data at my fingertips to back me up. I think we have less on the market this year than we did a year ago. There's off market trading going. There always has been in that market, sort of like the neighbor selling to the neighbor or whatever. But yeah, it's just they're like people just locked down and not moving. So therefore, it's not pulling the buyers up on the weekend looking at the houses because there's just not that much for them to look at. That's my theory, at least. I'll give you one tidbit. It's like pricing goes, because I was on another call with agents around the country. I was the only one from the Northeast a couple of weeks ago. So this is like Texas, Nevada, Oklahoma. They were all saying, "Oh my God, it got so quiet. Days on market's doubling." It's like I feel like we're the opposite.
Yeah.
I feel like both of the markets are the opposite. So last thing, I listed a house. A friend of mine bought a house in Roxbury, the town I live in, a year ago. Paid 1,240, added a generator, which cost about 30 grand, and we just went into contract for 1,378. So appreciation is still happening for sure. And I don't know. I found that very interesting. I did not think he was going to get that price. The market will surprise you if you do it.
Interesting. Right. Yeah, I mean, the national headlines have been really bad for real estate, actually. New York City is, I guess, a relative bright spot.
I feel like we're always contrary, no matter what.
Yeah. William, did you give me a number for New York City? Does New York City sales?
Well, because there are about 50 submarkets within the market, I hate giving the numbers.
What's your average over those 50? What's your average over those 50?
It's like, because it's lumpy, it's 5. It's smack in the middle.
You guys with the 5. You know what? We're gonna do a new thing starting next time. No 5s. No, I'm kidding. I'm joking. All right. No, actually, what's interesting, you guys will find this interesting. When 240 people signed up for this call. And so I asked them the number when they register between 1 and 10. And that also is like averages to like 4.8 or something. It's kind of funny. So I think that's just where we are. All right. And that's not always the case. It doesn't always average that way. So, all right. We're on to Nikki. Thank you, William. Nikki, would love to hear from you.
So in the spirit of not saying 5.
Oh, you just went mute all of a sudden. Nikki, can you hear us? For some reason, it might be a bad connection or something. Yeah, I hear you now.
How's that?
Yeah, I can hear you.
So, it's such a strange market. I have sellers calling, wanting to talk about listing their townhouses and listing their co-ops. I have buyers who are on the fence. I have people who are relocating from California, from Paris, from Florida. It's such an interesting mix, which tells me, yes, people still obviously want to be here. This is where you want to live. This is where you want to play. But also it's very challenging with sellers who bought
10 or so years ago and saying to them, you're not really going to get out for more than what you put in. And that's a really hard conversation to have, but having as much conversations with all of you, my esteemed friends and colleagues, and just trying to do the best that we can with the information that we have. But I have been crazed for the last couple of months, just running around, calls coming in. So it's, I'll say 6.1, but really I mean 5.
I'm going to say 5 because you got to say what you really mean, Nikki. So I'm putting you down for 5.
It's a 5. This is
It's
such
okay.
a strange and a nuanced market. And trying to explain that to people who are not from New York, they look at you like you're a Martian.
Yeah. The fact that the sales market hasn't done anything for 10 years, I do wonder if in retrospect, 10 years from now, we're going to say, why did we buy at that point? That was like the genius time to buy it. The market didn't do anything for 10 years. So you know what I mean? So right now, everyone's like, not really, this could be the time. I'm not saying it is, but it could be.
It could be the time. And I think that the unspoken value in the co-op market is just there. And that's a conversation that some of my buyers relocating, they're like, this is where we're gonna retire. I want to buy a co-op in Manhattan. And I haven't heard that in a long time.
Yeah. Maybe you'll start hearing more of that. Thank you so much,
No,
Nikki.
I just want to really quickly interject.
Yeah,
I think I think we brokers hesitate, to give us an 8 or a 3, right? Like way on the other side of the spectrum. I think it's because this mindset of, is it the right time to buy? I'm sure many of you would agree. It's the right time to buy when you're ready to buy, right? And if you're going to stay at a property 10, 15 years, if you're ready to buy, buy. I think timing the market according to like what the score is not really a good way of using your money. So I think it's the approach I'm addressing, right? In the way we think, in the way we advise our buyers and sellers. Anyone wants to agree with that? Or
Thank you. Yes, thank you, Antonio. All right, Brian Morgan, what do you got for us? And I know you do dabble in the rental market, so feel free to give me your thoughts on that too.
Well, the rental market's a 9, at least. Rental market is wild. I just, I go back and I keep thinking about, like, say, 10 years ago, we talk about this 10-year timetable of the sales, but what about the rentals? And I can just tell you anecdotally that what I used to see when I put on a rental for probably, I don't know, 15, 20% less than I had it on today. And I'd be lucky to get like a few leads a week, 4 or 5 a week. Now I get like 3 to 5 a day. I think that paints a picture of where we are today in this rental space compared to where we were. And I know, Noah has had been talking about this and has got this whole thesis, and I'm not sure. I think there's something to that, but we have to take a step back and remember that there is a larger picture of the debt cycle and where interest rates could be going based on that picture. And we have to take that into account when trying to make predictions. And I agree with Antonio. It is not our job to make predictions. That is not our job as realtors. We don't know what's going to happen next. There are people that went to Harvard and Yale and they're on TV. They get it wrong all the time. They're like the weathermen. So I think we have to stay away from that. And we have to focus on what's happening in real time now. And it's a bit of a dangerous time for real time right now, because with the geopolitical events that have been happening, the data is impossible to keep up with, more so than ever right now. And I did a video a few weeks ago saying, okay, well, I waited 4 or 5 weeks for the data to kind of come out and flush out, and it almost wasn't enough time, because that's how volatile things are right now. So I think you really got to get on the ground and talk to your realtor and feel what's going on. If you're a buyer, and you're like, to ask your realtor, what are you seeing out there? Kind of like what we're doing now. Like, I think it's a really productive exercise for anybody who's not a realtor to be listening to this, to hear all the anecdotes and to kind of feel things out. I can tell you from my own experience in the last 3 months, I have certain products that are going to bidding wars. And I know a lot of us are feeling this too. There are other products that when we get a bid and we have an accepted offer and those contracts go out, we are praying that they get signed, because we know if it doesn't, we're screwed, especially this late in the season. And Dan could be correct that this spills over into July. We'll have to see. But I know I'm praying that this thing gets signed because we got nothing else going on. And I'm feeling crickets on some of my listings. So it's quite the dichotomy between markets. And it's like, it's not bad enough or hard enough for us realtors that we have 1 bedrooms, 2 bedrooms, 3 bedrooms, 4 bedrooms, townhouses, co-ops, condos, condops. We have apartments with views. We got new development. We have Brooklyn in the mix. So there's all of these factors that we have to take into play right now. And on top of that, we just got this geopolitical situation where it's affecting some of the demographics that are buying these products. So what I'd say is that I have certain people that are coming in that normally I see foreign buyers and I see crickets on those listings. And I feel like whether you like the tariffs, you don't like the tariffs, I think there's a lot of negative media towards the tariffs. And I'm not saying that's correct or incorrect, but I think there are a lot of different opinions, but it got sold poorly overseas, especially. And I think it's driven a lot of fear. And I think that's taking people off the sidelines, buying the products they would have purchased otherwise. And I can tell you, I know in a building that I work in a lot, and some of you might know the building, I'm not going to say it, but in February, I had 2 listings that had over a dozen showings for that month. I lowered the prices on the listings about 7%, and I had half the showings 3 months later, after all the tariff talk. So clearly this has had an impact on our market, but not everywhere. I have other buyers, they don't blink. If they find the product they want, because in a lot of respects, the newer apartments that have hit the market over the last 5-7 years, when that product comes up, they will pay and they won't hesitate for 2 seconds. They will buy it and they will do whatever it takes to get it. So we're in this market where it's so diverse from what's happening, it's hard to really figure out. And that's why, everyone's giving 5s, because you're trying to attack the middle and being like, okay, well, things are going great for this product over here, but things are going terrible for that product over here. So I would give a 9 to the rental market, 5 to the sales market. Well, I'm not, Phil doesn't want 5. So
No, I want what you believe. I want what you believe.
Here's why I'll give the 4, okay? Because I think there's a lot of people that are being affected by this tariff situation, and I think it's really hurting them. And I feel for them because there's nothing they can do. And I beg them to rent their apartment for a year or 2 and let this whole thing flush out. But a lot of them just want to trade. They want to make the trades, and they don't want to rent it. And I understand that too. They don't want to be a landlord. I tell them, I deal with it. I handle it for you. You don't have to do anything. I'm going to manage it for you. Don't worry. We'll get out of this eventually. And they want to sell it. And I feel bad because they're going to take a bath, as opposed to what they could have gotten even just a year ago. But then you look at some of Noah's charts and you're saying, well, how could that be? The condos are on all-time highs. And that's what we circle back to this crew here talking about how fragmented a market we actually are in. Because some products are doing really, really well, bidding wars, and other products, I'm like, how do I get a person through the door? And I'm doing the same marketing. I'm not doing anything different. Treat all my listings equally.
And Brian, I wonder if the price action that's coming in right now as well is more of a function of just buyers just a shift to larger, more renovated, more views, better, higher quality properties in general, which obviously are at a higher level. And that's just what's pushing.
I think that's happening. I think that's happening on a domestic level. You're getting domestic buyers coming in here, parents buying for children, and they're willing to pay whatever it takes to get their child the product. In other respects, I'm seeing families where the numbers do crunch in a lot of these co-ops. You're better off in a lot of respects purchasing maybe a 2 or 3 bedroom co-op with these discounted prices than you are renting right now. But if you shift that to 1 bedrooms, that is not the case. The numbers don't crunch. So the numbers that are crunching, the co-ops that are priced correctly, they're going to move. The 1 bedrooms of studios, people like, I'm not going to I want to travel, I want my money, I want to be liquid, and they're not going to buy the product. So it's a hard market to dissect. And we just got to be vigilant and out there and, use Noah's tools and also use what we're learning on the ground, talk to other agents and give everybody everything we're seeing and watch, things like this that Phil's hosting so people can get educated.
That's great. Thanks, Brian.
I,
Go ahead.
I also think that when Fred was talking about 740 and 750, I love Urban Digs. I watch the YouTube. I'm a huge fan, but at the same time, we live in vertical neighborhoods, right? It's not like all the buildings in one block or the neighborhood, the entire neighborhood, the average price. The averages and the median, all that stuff doesn't work. It is that unique property in that vertical neighborhood. So I think trying to make it so that it's if it's an 8, go buy. If it's a 3, don't buy. It's like asking, is the tariff going to happen or not? Who are you betting on, Harvard or Trump? Right? I had my money on Harvard, but I don't know what's going to happen. So it's that kind of like, you got to do what is right for your property as a broker, for your sellers, for your buyers. And as a buyer or a seller, you got to do what's right for that particular financial picture in your life. Fred, you
Phil, one other thing I would say that I feel like none of us have really addressed is the way the market is segmented by generation. That generationally, people my age, and I'm way older than any of you other guys, we had a very different attitude towards buying and building equity than people who are the age of my kids have, where they're much more experientially focused. And I think the experientially focused person, as Brian was saying, kind of wants to feel like, let me not make such a big commitment. And the older person, or the person who's maybe now got a couple of kids, that person is thinking much more in terms of a long-term commitment. And I really do think there has been a substantial generational shift in the way people regard ownership. Also, we have a generation of people who have come of age financially during an extended period in which real estate hasn't gotten any more valuable. So that, every decade you see a substantial increase in the value of your home thing. They haven't seen that.
In an otherwise high inflation environment, Fred, as well.
Yeah, man.
And I was just going to add, Fred, also a lot of those people came of age during the financial crisis, where they saw the financial crisis, and that was the housing crisis. And so that's affected people pretty deeply, just like COVID has in other ways.
Yeah, and now we have the insane presidency. Anyway, I'll shut up
now. All right, Tracie, we haven't forgot about you, and you probably came on first too. So somehow the order got all messed up. You didn't. Okay,
I actually came on last. So what I get? Saving the best for last. No, I'm just kidding.
Yes.
I'll keep this short and sweet. I don't, usually like to be a contrarian, and I do agree with the 5. But Brian, Morgan, you put that so perfectly. That's absolutely right. It is a very segmented market, and it all kind of balances out. I agree with you completely about all of that. Rental could even be a 9.5 or 10. It's insane. I'm finding there's so little inventory because so many people are just renewing their leases. So when we do happen to list something, swarm. And as Scotty mentioned, we have to very quickly say, application accepted, or else we get 1,000 emails. It's really insane, but I can guarantee my clients that I can rent their apartment. I certainly can make no such guarantee for sellers. And we are morphing into something that I'm sure a lot of you are as well, that we are listing now things concurrently, either right off the bat for rent or for sale first, because they really want to sell. And we know the minute that we list it for rent, it's going to rent. So that's kind of a second chance thing, but that's been something we've been seeing a lot of. And I've also seen I've had a long-term rental client of mine who's always kind of toyed with buying, fully jump into the market to buy because he doesn't see paying $12,000 for a 2-bedroom. He'd rather pay that money to himself and buy. So that's been, kind of the flip side of a conversion. But I know that there's been a lot of talk about the FAIR Act, and I do, just because my team and I do a lot of rentals as well. If I can just say one quick thing, the city and Street Easy, for all of you who are the recipients of the Street Easy email that just came out today saying, since this is going to happen June 10th or 11th or whatever it is, the city is acting as if this passage is a foregone conclusion. It is not. Hal Gavsey, head of Elliman's rental development, was there with the judge 2 weeks ago, who was very fair. And by the points of law, this does not have merit. I will be very surprised if it passes. The expectation and the revenue attorneys were thankfully very well prepared, much better prepared than the city. That Chai Osi has had nothing to say on social media because he can't, because by the facts of law, this is not constitutional. So the judge is expected to issue, make them go to court. And have to then fight it and appeal it. And so I will be very surprised if this has to go through. And just a word for all of you brokers that have questions about this, it is not retroactive. If you rent something now, the tenants better pay that fee and they can pay whatever you're charging them. So that's my little soapbox, very impassioned feelings about this.
Tracie,
Thanks.
we're
Wow.
starting to get pushback
Good
on this, Tracie. Are you getting pushback from people that are coming to your listings?
Pushback right now, it is against, you can charge whatever you want. We are getting 15%.
No, but I mean, are people,
and you know
what I'm
what?
asking, and I'm just hearing people say, oh, well, I don't have to pay this fee. I'm not paying a fee because this is going in.
Do you want to rent the apartment? Do you want to rent the apartment? It is not a point of law. The law.
I just want to know if you're hearing that from people.
Yeah, of course.
Yeah.
People who are not
I'm hearing that
informed
chatter.
because, sorry, Ryan, people who are not informed because they, the media loves to talk the big, titillating, scintillating headlines, the clickbait stuff, as we all know. But the reality is this is not in law. This is not passed. This has not been, and we do not expect it to pass in a couple of short weeks. Maybe I'll be wrong. Maybe we'll be shocked, and then we'll have to deal with that in appeal. But I think it's going to be, yeah, exactly. Keep praying. That's exactly.
That's
so
great
right
insight,
now,
Tracie.
no,
That's
you
some
can
great
charge
insight right
whatever
there.
fee.
Yeah, it's great. No, I'm saying it's great insight about that.
Well, I mean, this is literally, I just got the email back from Hal, like 30 minutes ago, confirming this.
I feel like we have like some
I
inside
will
information and we should be
just
trading on this
say,
stuff.
I know.
Another,
I do think Tracie's point is
just back,
incredibly
spread the word.
significant, that in an environment like this, they may want to push back on the commission, but if you have 6 people in line behind them, then let them push. It's
Sure.
not like you can't go to number 2 or number 3 or number 4. So
Exactly right. For most properties, exactly right. And the thing of it is that the remedy is going to be the exact opposite of the so-called intent of this law, which is that rents are going to be increased to
Yes.
cover the landlords having to pay the fee.
That's it.
You're already saying the rent is too damn high. Just wait if this Fair Act does pass. It's ridiculous, and no real estate experts were consulted in the passage of this. So
And-
you go, Lydia Lander. Hello, you collect that rent. I'm reading you in the text.
I'm so happy.
I feel very strongly about this, just as I do. Sorry, since I've got my soapbox, I'm holding on to the conch. Mixing metaphors here. The whole thing with the commission. I do not take a listing if my seller's not willing to pay a buyer's broker commission. So I'm getting 6% or 5% if I have to, but that is also ridiculous. And most people who have any kind of experience are doing that because sellers could always pay buyers brokers whatever they wanted. This law and all the publicity, all the hoopla just shone a light on it. But I also, if you ask me about this, we need buyers brokers and they need to be compensated. If I have a listing or if I have a buyer who wants to take a property, the seller's not paying my commission, you better believe our offer is going to be much less below my commission and then some, because buyers can finance commission as part of the purchase price. They can't just finance commission out of pocket. So there, now I will relinquish the microphone. Mic drop.
Love
Thanks,
you,
guys.
Tracie.
Love you all. Very great to see you.
A really quick.
Always fun times.
The big thing that I said during my time is go and make your voice be heard. We are a quiet giant, we brokers. There's thousands of us and we all vote. Go talk to your legislator, educate them, because I'll have an anecdotal evidence. I had a $4,500 rental, which I love what Brian says. Almost all of our exclusives in sales, we always say to our sellers, hey, put it on the market as a rental as well. We'll handle everything, because I feel bad that you are taking a huge haircut on this. But $4,500 and with the Fair Act and everything, said, okay, we don't know if it's going to rent by that time. Let's have you pay seller or landlord, right? And they, it was getting $4,500 before. You know how much we put it on? $7,000 rented in a week, and there were 4 apps. And if there's any pushback, now the other side where the tenants were asked to pay the commission, and I can't talk about commission because we can't collude here, right? Everything is negotiable. In the other side, I always say, well, there's 2 apps, or there are 2 other offers on the sale. So you know, you can negotiate, but we're going to go to the next person if you are too unreasonable. So it's about the pricing and where the market is, and it's about the building. It's about the condition of the property. There's so many components that that you have to take into account.
Thank you, Antonio. I want to get to Brian Lewis. By the way, is Tracie still there? If she's not, I wanted to get a number from her. I don't know if she gave me a sales number, but did you give me a sales number, Tracie?
I did. I started a non-contrarian 5.
What is it?
5, not 5.1, 5, full on 5, as
5.
Brian Morgan had explained. 5.
A non-contrarian. Awesome. All right. Thanks, Tracie.
And
All
now
right.
here we have a guest appearance from Brian Lewis.
Yes, Brian
my
Lewis.
God,
Just
Fred!
joining us.
Really
In
saved the best for
for
last
his
then. Really
moment
saved
of
the best for last.
glory, and then he's gone again.
Oh my God. I ran into an apartment. I was on the street. So here's what I'm seeing. And there's a dog in my lap. So here's what I'm seeing. I think it's a 6, right? Are we doing seller, like 1
Yeah,
to
you
10
got
seller?
it. Seller is a 10. Best seller's a 10.
I'm seeing 6, but it's anecdotal. That's me. Um, my delay was courtesy of a random call from someone who once gave me a buyer who was a very big deal. And so when she calls, I listen, and it's a good referral. But I'm getting a lot of these, like, I don't want to see what's on the market. I want to see what's private. And I know people probably are sick of hearing about our Compass's private world, but I got to tell you guys, it's really something, because people are combing through what's out there. They want to see other things. What can you do for me to show value? That's not out there. And I will also say, I think the cynical approach to it is that, oh, you just get all directs. I don't. All my privates that have sold have been co-brokes, frankly, not even with Compass. So I'm sending out lately a robust list. It changes every week of, let me show you my privates. but it's and all it is, because I want to keep in line with Rebney, is a little Google Doc that has a link, and it's very DOS looking, right? It's not fancy. But if anybody is ever combing for anything and you're not finding it, call me and I might have something. That's all. But those are getting traction. I have a closing today on one where it's private. I told someone about it. They brought somebody. We're closing. That's happening. A high-end stuff. I did a deal in a townhouse that was also private. That was interesting because the owner didn't want to clock days on market, and it's a finite little group of people. So as far as show me your value, what agents these days are having to prove it every effing day. Boy, that world does do it. And I just got that call where she said, look, price is nothing. It's Fifth Avenue. It's condo. They want a view. They need off market. They've seen everything. So that's my job, is to dig and to find, and leaning into
Hey,
that
Brian,
private world has
quick
helped.
question,
Yeah.
Brian.
Yeah.
I'm curious on the privates. Give me
Yes.
your straight opinion on this. Who's getting the better deal? Is the seller getting the better deal? In other words, a higher price than they would normally get if it was on the market, or is the buyer getting the better deal? They would have had to
There,
pay more, in your
It's a
opinion.
great question. There's two ways to look at it. Sometimes my sellers in the private market are basically trying to get a price out of their system, right? They're trying to like overshoot and not grow the days on market beard. Did I say beard? But yeah, I think sometimes it allows them to try it out, audition a number, not clock any bad days on market. Then they get it out of their system. We go public. Boom. There's that seller, in which case, if they got a buyer, I would say the seller benefits because they're trying a pie in the sky price. The buyer can benefit if it's priced relatively right in the market, maybe a premium, and then the conversation becomes to the buyer pool, make us not list it.
Mhm.
Take it off the market. Take it off the market. And if it's a premium home or in premium condition, that sometimes work. I've got a spot down in the village where we put it on private for a while. We only got like 3 showings privately. So it wasn't a robust world. But then we went on publicly, we moved the price down, and now we're busy. And the world thinks we're relatively new. I mean, Street Easy hasn't docked us days on market. It didn't grow days on market on RLS. So when we hit the market publicly, we were adjusted. And then
I've got one right now on 12th Street downtown where we are private and we're about to get a deal. And guys, I will show anyone my private listings. I don't care what company you're with. I don't like, I show anyone, and all of my private deals have all been, if I'm not mistaken, with other brokers, and most of them not even Compass. So just a heads up on that. The other thing I'm seeing anecdotally,
which is why
yeah.
they should have been listed in the full market in the first place, just
Well,
to offer a
I hear
differing
you.
opinion.
I hear you. How's Brown Harris? Are you
Changing
good?
the subject like that.
That's why he
Oh,
is a master of transactions.
I don't know about that. But I'm also seeing a lot of people ask me to put things on for rent, more like big, beautiful townhouses. They're like, oh, I don't want to sell it. I might sell it. I've got one in Chelsea right now on West 20th Street. It's fantastic. And the seller's like, oh, bring me 29,000 a month. And I'm like, okay, I do the marketing like it's a sale because maybe they'll pivot, right? And hey, $29,000 check's not bad. And then yesterday she whispers in my ear, hey, don't put it on your private market, but whisper to people if they love it, I'll sell it for 10. So I'm getting a few things like that. And that's the market that I'm seeing. In our more everyday market, sort of sub 3 million, we're getting some good action. Look, front of the line if it's renovated and move in, back of the line if it needs a big renovation. And that's nothing new. I'm sure you guys have covered that already. That's kind of what I'm seeing in the market.
Great.
Was there another topic that I missed
No,
entirely?
you
Might be
got
good.
it. You're
Okay.
perfect. But it's a little later. It's a little after 12, a little later than we usually. Does anyone have any questions for anybody or thoughts they want to get off their chest or anything like that? We've gone a little later than we usually do. No, I'm not seeing any hands raised or anything. Okay, great. Well, thank you, Brian, and this has been an amazing discussion. And if you're on the call, I'll send out a summary so you can send it out to your client. And I always say this, but I'll say it again. Feel free to plagiarize any information in there if it helps you with your clients, that's great. Use it as content. That's totally fine with me. And thanks to everyone on the call and in the audience, and thanks to the amazing panelists. If anyone has any feedback, let me know, and feel free to come off mute, say goodbye, and until next time, have an amazing summer,
Bye,
everybody.
everybody. Thank
Love you
you.
guys. Take
Thanks,
care.
everybody. Great to see
Bye.
everyone. Bye-bye.
Bye, guys. Great
Bye.
talk. Thanks, Phil. Appreciate you. Number 45. What?
45.
Bye,
We have to have a party at 50.
Yes, we
Take care.
will. It'll be a
Bye,
party.
everyone.
I'll bring the champagne.
All
Bye.
right. Take care.